I'm doing great on this Thursday. This is Jordan with Conquer Trading and Investing, and this is CTM, greatest there ever was. All right, let's start off with just recapping what happened yesterday with Powell, the FOMC, and then we're going to look ahead and we're going to talk about, obviously, the Bank of Japan meeting on the 19th, which will be overnight, so likely the 18th, roughly around usually 12:30 a.m. Eastern time, New York time. And yeah, they don't really have like 2 p.m. Eastern time rate statement like Americans. 2:30 press conference on the dot. They kind of just go with it when they want to go with it. Uh, and we're going to look at what the ramifications could be as the Bank of Japan is expected to raise rates. A lot of people are really looking at what would be a black swan. This might be the black swan that everyone has been looking for. It's on a lot of people's radars. I don't want to say everyone. I want to take an authentic look at that. I want to break down this assessment of it that Cabby had shared and ask for my insight into. We'll take a look at it together, and hopefully we'll come out with just a little bit further of clarity, which is what we want to do. So we go back and Fed cycle, right? I've been laying out what was going to be the next phase of the Fed cycle for a couple of years now. And sure enough, right on time, exactly what has transpired. The Fed has stopped QT and are now going to be raising their balance sheet at a clip of $40 billion per month. Now, I expected that would be somewhere around $20 billion per month. That was, and they're calling this now reserve management purchases. And we go back into the last time they stopped QT and began raising their balance sheet. They called it organic balance sheet expansion. They think you're stupid. They must think you're stupid, right? We just could change the terms and anyway, $20 billion a month last time. And I just want to just reiterate one more time. The last time this happened, this is like a lot of people are talking about, is this QE? Is this not QE? Does it matter? They're still printing money. Well, they're not really printing money. The banks need to lend out the money, you know. Listen, this is like, well, I've been very articulate exactly what this is across X, and I know that you know what this actually is, or how you should think about it, is more like, instead of outright QE, outright QE is this: the Fed comes in, they start buying long-term duration, and they do it with rates near the zero bound. This over here, this balance sheet expansion, they're buying shorter term paper, and you see that the rates are elevated. The same is happening right now. This is like slow motion QE, in so much as right now they went ahead with the 40 billion, which is higher than expected. That is quite dovish, right? What they're trying to do is counteract the forces of QT that went on too much, and at the same time build reserves. So there's a lag here. Last time you saw that lag expressed in Bitcoin by several weeks. And I know that you know, because we've covered it ahead of time. But Bitcoin, as they began last time with their organic balance sheet purchases, made one and then two more lows before stabilizing and beginning its run up. Now, it's not the same. Well, this is it. I'm sorry. That's timeout, rewind. That's not correct. This is the global lockdowns. Bitcoin made over here one low and then the two lows, right? So you can see it over here, taking out, here's where they begin the balance sheet expansion, taking out one low and then grabbing that wick over here on the second low. This is a different thing. And had this thing not happened where they locked down the globes, yeah, then likely we would have the bottom would have been in, and we saw at that particular time not only risk running, we saw that gold, Bitcoin, and the dollar were all rising at that particular moment. There's one thing I forgot to include in this presentation today as we get into it. So I'm sorry for that. But I'll be able to at least express what it is with y'all. So does that mean that I expect right now in this current situation, and what's different about this situation compared to last? Well, the pace is double. Instead of roughly $20 billion a month, it is double. That's different. We all know that Powell is set to sail in April of 2000 in May of 2026, and he basically is like, between now and then, I'm going to be pumping $40 billion a month. Some people are like, that's not much money. 40, a $500 billion a year on top of the 2+ trillion a year it takes to just run the government, on top of the interest that it takes to go ahead and maintain the expenses the government already had. It's a lot of money, and this is just the next phase of the Fed cycle. What's the phase after this? Well, I mean, we don't know, in so much as that they could have to be forced into a period where they have to raise rates again from here. I don't know, like, and I'm not calling that the next action of the Fed is likely going to be cut. We're trying to time whether or not it's going to be right in January, March, April. But expectations right now are is that January is looking like a pause. We have jobs data next week coming out, and then we have the Bank of Japan. So what I'm trying to say is that last time it was balance sheet expansion and then a return to outright QE. I can't say for a certainty that the next phase of the Fed cycle will be a return to outright QE, because if they're able to go ahead and in 2026, now that they're stabilizing the liquidity in the system, yes, the Bank of Japan coming out next week could counteract that. We'll talk about that in 1 second. We're not out of the woods by any means. And not only are we not out of the woods, again, it took several weeks last time back in 2019, the last time they stopped QT and began that balance sheet expansion, to stabilize the liquidity. It could take something similar this time, I imagine, or not. Maybe everything's okay. Maybe, like, since they didn't have to abruptly stop it like last time, and they were able to stop this weeks ahead, like they told you on December 1st, we'll stop QT. Last time it was like, oh, that was not good. We need to stop it. We need to start pumping in money. So we don't know. Like, we're looking for things to be similar, but it's unique this time. No question about that. And last time we did not have an opposing central bank, one of the big four, the Bank of Japan, having opposing monetary policy at the same time. Bank of Japan looking to hike rates, tightening as the Fed is easing. That's opposing monetary policy. We have to see, and we have to find out what which one's going to prevail. I want to talk about that further with you all. So definitely higher than I anticipated. Powell, it looks like trying to stabilize the system so he could get out of here, right? It's not happening under my watch. I'm going to make sure of that. Stay with us. I'm looking forward to this one. Glad you're here. Glad you're here. Rewind it. Watch it. This is avant-garde. I'll tell you that much. Let me jump back over here and let me start with this. Now that the balance sheet is going to be rising, if you remember back when that narrative, right? I told you, let me show you back in the summer, so you're not caught off guard by the tight correlation between M2, global M2, and Bitcoin. I was like, it is a poor indicator that lags at the top. Now you could see, and since then, that massive divergence between the two. But here's the thing. In bringing that up, I talked about how monetary base total is the best predictor of Bitcoin's price, right? And as the balance sheet is about to begin rising right now, we are going to see soon, we're going to see M1, which has been crashing down. This is lagging in so much as that we get the data a month late. So I'm able to project to you, now that the Fed's balance sheet is going to begin going the other way, we're going to be seeing those reserves printed, sent out to the banks. We're going to see M1 bottoming right here in this month, and going forward is going to be rising. And I do believe that likely is going to say that Bitcoin here is getting close to bottoming very quickly. If it hasn't already, I don't know if it has or it hasn't. Let's look over here and just peek into our chart over here. And Bitcoin clearly struggling. So let me just start off with the overview, right? A couple of things. I have pointed your attention to this green dot over here, to this green dot over here. This is the last Japanese yen unwind. We're about to bring that into the story in one moment, so stay with us. This over here is the shakeout after the spot ETF launched. This over here is the stabilization of price prior to the spot ETF launch. This is the intern leak, SEC. We're going to be actually launching some spot ETFs. The courts ruled that it's allowed. And then you had the test into that level. Japanese yen unwind, August 2024, another test at that level. We just broke that level during what we could call the test of the lack of ample reserves. Fed forced to stop QT and begin balance sheet expansion. Again, that's like slow motion to build those reserves, to get that liquidity stabilized. We could, for sure, take out the low or not. We don't know what's ahead, but in the weeks ahead, last time it took several with 2 lower lows, I'm making the case here that there's a strong probability that we bottom. And when I mean bottom, I mean prior to a new all-time high. Big prediction going against the grain pretty strongly, but again, anyway, I'll leave that there. So we're watching over here, and if we break down below 87, right, that's going to say, well, there's a good chance that we're coming in to test that low over here. I want to look at that from you with this angle. And I went ahead and just added something to this piece of the puzzle this morning. So I want to take a look at with you. This is what we're looking at. And I was saying to you, it looks like that Bitcoin is actually entered into a new parallel channel. And this is how I drew it off of these touches here, the top, and then the bottom here off of these 2 wicks. And I said, wow, that's interesting. It's the first time that Bitcoin went from like this instead of like this and ultimately like this to this to this. That's different. There's been a lot different about the last 4 years. So this is another one of them. Not just in Bitcoin, I'm talking about in global markets. Now, you could see that we broke down from here, obviously. So I'm just extending that line. I'm just keeping those 2 touches over here, and I'm extending that out to bring this into the conversation. I'm going to go ahead and just now come down over here to that last wick. And I'm saying, well, I want to see what's up with it. Like, where do we touch? And you could see that, oh, wow, that parallel channel, even though it looks like we broke down right here, which we did. We broke down from that structural resistance for sure. But oh, it's still in play. So wait, like, okay, like what happens if we take this out? We could take out that low. Remember we talked about what would happen if we took out the April low, how that might potentially be just a liquidity grab that would, Bitcoin has often done something so much similar to that. Hold on, let me come back over here. So I'm going to come down one more. I'm going to come down off of the low here. And what happens if we do take out the current low we are? We know that, last time in 2019, we made 2 lower lows. And, here we have, this would be taking out the low. I'm looking for an area of support over here. It's coming in, right? If it happens in the next few weeks between 73 and upward sloping over here, it is the upside resistance of that mega consolidation prior to the election. It would take out the low. Below this, that's where it gets bad. But into there, I would not be surprised at what that level is. And you could see that it's very similar to the level I have over here. It might even be the same. This wouldn't be, for me, this zone over here, the orange and here, this is a mega buy zone for me if that were to happen. So I'm just kind of ahead and just playing us forward over here. And let me just lift this up over here all the way to where we just peaked out into resistance, right? And my eyes are over here where we just peaked out into resistance. And you could see here the touch right over there as well. So, and then you could see this is where the body stabilized for sure something for us to keep an eye on. So I went from saying M1, monetary base total, getting ready to bottom over here. We're going to be seeing reserves rise. This for me is a way better indicator. I don't care. You guys now know how many people have been telling you about M2, 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 M2. And I was like, watch out. No. And I was like, watch this. Well, this here, as Bitcoin has been being sucked down with that lack of liquidity, has been like steeply declining, is now about to reverse the other way. All right, let's bring this now into Japan. Before I do that, let's just cover our positionings. And we see that Tesla's still holding, didn't get shaken out yet, still holding open position, barely into profit, but able to withstand the volatility of the last couple of days. Ethereum is giving back a massive amount of profit in the last 24 hours, going from roughly 8.5% profit, now still open, to 2.6, still holding that trade. And we see Cardano has now entered on the short side. So we have a dance going on between a hedge with Ethereum long and Cardano short. Feels like a good place in this uncertainty that being hedged is, well, a pretty smart and good thing. Aside from that, we are just all into cash. Everything else here completely sidelined, waiting for some clarity to come into the markets. And that right there is a strong place to be. There was one comment that I didn't get a chance to watch. And I want to take a look at it. German analyst from the Frankfurt Exchange said the Japan rate hike should not influence the markets too heavy. So many people watch and expect it. What's your opinion on that? That's what I've been saying now for the last 2 weeks. So I agree with him. It doesn't mean that that's what's going to happen, though. I strongly agree. That's Don. That's my whole premise. That, you know what, is this the black swan that everyone's watching for? And maybe, like, I remember, I don't know if it was 2012 or 2013. It was I don't know if it was 2012 or 2013, but when the Bank of Japan began their QE experiment, like, that was one of those events that was very, very clear that monetary policy from a central bank was about to really shake things up. So, like, was that a black swan? In a sense, it was. Hold on one second. Let me just jump back and show you on a chart over here for those that weren't there at the time. This was a massive, massive opportunity. So let me come back over here, and you could see right over here, October 2012, Bank of Japan. I'm assuming it's October. This probably was the announcement leading into it. But look at this massive move. I was a part of it. This was one of the best opportunities since I've been in the markets. And you could see that, they began QE, and look at the massive, massive move on the Japanese yen. It was very clear. It was telegraphed, and it was something that, wasn't a black swan. Usually black swans are things that are bad. But I guess what I'm trying to say is, in this particular instance, I don't know if everyone was watching that. I certainly was. I don't know what, like, normal people, like, I don't know. I would say right now that normal people are really not normal people. Some really smart, forward-thinking people as well have been looking for the carry trade blow up to occur. So I don't mean to mince terms like that whatsoever, but there are a significant amount of people that really believe, as the Bank of Japan is getting ready to potentially raise rates next week, that is going to cause a tremendous dynamic in the market, that is going to cause another revisit of the Japanese yen carry trade unwind. So I want to share my thoughts on what I think is going to happen. I do closely mirror that German analyst who does believe that a lot of people are watching that, and that is sorry. Then anyway, back to where I think it's going on. Yeah, I do think a lot of people are watching it. That does not mean that it can't blow up because a lot of people are watching it. I personally don't think that's what's going to happen. That doesn't mean I'm right. I've been wrong so many times. Who knows? But if you remember, we recently had, and I think this is clouding a lot of people's bias over here. They're focused on what happened the last time the Bank of Japan tried to raise rates, and we saw that massive unwind. And just like the yen going, getting sold off crazy, here it appreciated like crazy. Not the same extent, but the amount of QE that was being bazookaed out was definitely a lot more. So a lot of people have this in their mind, and as they're expecting a similar behavior, which may or may not happen. We're watching it. Could you say that potentially the Federal Reserve, very aware of that, the reason that they went on the high end over here with the $40 billion a month was to do their best to counteract what they thought might happen? Maybe. I wouldn't be surprised. Now, during this unwind, though, over here, it's estimated roughly 50 to 60% of the carry trade, the Japanese yen carry trade. There are other carry trades being expressed today. One of them, for example, is with the rate, the high rate of the Mexican peso is definitely being used to express a carry trade, especially with their economy being so strong, being on the border of the United States. However, the amount of money between the two, like the amount of money tied up in the Japanese yen, completely dwarfs that carry trade. There are other carry trades. This is the main carry trade. A lot of people talk about it as like the printer, the global printer. A lot of people borrowing cheap yen and then putting that money to work elsewhere. It's estimated between 50 to 60% of the carry trade was unwound during this particular instant. That still leaves trillions of dollars tied up in the carry trade. There's still a substantial amount of money tied up in the carry trade. And of course, there could be ramifications. Now, I'm making the assumption that if we see the yen go bid on the news, right? Again, this is one touch over here. There's nothing below it. I'd be worried about a break over here. A break of this level then likely brings in a test of this level, a break of that horizontal support, and this thing is probably going a lot further, and then things are going to be bad. Up until a break over here, though, I am not so concerned. I'm not concerned. And not only that, I think that any type of yen strength would then cause a lot of other people to close out the carry trade. And then there's also the dynamic that the Bank of Japan is really like in a really tough place. You think the Fed's in a tough place. The Bank of Japan is in a much, much, much harder place, much more difficult place. And any type of yen strength is going to have to be short lived. And they're going to have to reverse that policy. They'll do it first with verbal intervention. And then watch, they'll go from raising that 25 basis points to cutting it just as quick. I don't think so. There is also the very, because they do a lot of verbal intervention. They do a lot of verbal intervention, and it seemed to have worked here for a moment. As the yen was spiking, they're like, "Oh, we're going to be raising rates." Yen came off a little bit, but now it's the dollar in play. By the way, I just want to bring into this conversation before we get into the video that Cabby shared and my view of it. One important thing, and that is that since is this dollar weakness or dollar strength? As per our expectations, as soon as the Fed pivoted to they're going to cut, we were like, we're probably going to get a trend line break. That will likely bring us back into a test of this over here. I have to bring that up. Hold on one second, please. You see the two touches over there. So we have between 97 and then I bought it down. Usually retests go lower. So this is where I have the important test in that area. So right now, what are we seeing? Are we seeing dollar weakness or are we seeing yen strength? We're seeing the dollar come off today, and today the yen responding favorably to that. That seems like that right there is dollar weakness. But if you look at where the dollar was in February 2025 to where it is today, it is significantly lower. And if you look at where the yen was, here's February, where the dollar peaked 2025, it's the same, right? So that shows that the yen has been way weaker than the dollar. So I'm trying to say, well, the Fed is beginning rate cuts. We're looking at, probably projected. Some people think that we're going to have a very strong dollar in 2026. Maybe they're right. Let's keep an eye on that. But up until this moment, even with all of the dollar's weakness, with the yen unwind, dollar to dollar, the yen has, with that dollar weakness against other currencies, mostly the euro, specifically gold, right? We're not wading into DXY, excuse me. But I want to bring that into the conversation also in 1 second. So is there, like today? Yes, that's dollar weakness. You're seeing yen strength. If the yen, they hike rates, are we likely going to see a bit into the yen? Yes, likely. We'll see how long it lasting. I don't think that we're going to see the damage that we saw back in the last Japanese yen carry trade unwind. Again, 50 to 60% of that trade was covered. That leaves room for further to cover, but I don't know that it is the black swan people are looking for. Let's get into the video over here a little bit. And this is a great video presented by Finance Prism. You should go ahead and check out their stuff since I'm sharing it here.
Right now,
show some love. And first of all, the presentation here, including the graphics, is top notch. Absolutely wonderful. If you're looking, let me share it in the comments. If you're looking to understand exactly all the different dynamics of what the Japanese yen trade unwind might be, and is how Japan will bankrupt the U.S. economy a little sensational? Perhaps, unless it happens, and then it was right on time. But let me move into this, and I'm going to start over here in towards the conclusion. Okay, so we're going to start. I'm going to play this video, and then I'm going to be commenting on the video as we go back and forth. And then I'll come back towards some other areas over here, such as the crypto link, and then also the mechanics of it. All right, so let's start over here in the conclusion.
This strategy avoids the middle, the assets that are most vulnerable to inflation and volatility, and focuses on two extremes. Extreme 1, maximum safety liquidity. In a margin call, cash is oxygen. Institutional investors are holding significant portions of their portfolio in short-term U.S. Treasury bills, T-bills. Why? Because they currently pay around 5%, and they are liquid.
Okay, we're going to come back into that in 1 minute. So he's talking about right now, like, how could you protect yourself from not just, like, a lot of people are looking towards July 19th, Bank of Japan meeting, like an immediate reaction. Often things take a lot longer within markets to be realized, even if people see it happening. So some people could say, well, this has been happening and unraveling since 2008, since Bernanke began the era of QE, and that's true. And that would just be one focal point we could focus in on. And since 2008 to today, a lot of things have happened, and a lot more will. All right, so you have a bunch of investors right now, and this is being offered how you could protect yourself, who are holding cash being expressed through short-term T-bills. So just pause that so I could come back to that.
This is the dry powder that allows them to survive the volatility and buy high-quality assets when they go on sale during a crash.
And listen, there's no during a crash. Cash is king. And if you know when to deploy it, there's nothing superior. One of the things that we could talk about was in late February, March of 2020, during what was a market crash, right? And the thing is a lot of people didn't know when to deploy that money. And a lot of people thought that that first crash was going to lead to an insolvency event. Now, cash is great. We expressed it differently. We were trading, swing traders, and we actually pushed those hard during the downtrend And then over a 2-week period, 2 to 3 week period, we're able to find the bottom and then express that only and solely on the long side. Now, is cash better? Yeah, it's like, no, well, I shouldn't say yeah. You're making money on the downside. And that was through currencies, different situation, also short on the S&P 500. Anyway, cash serves a purpose, but pause there for 1 second because we're going to come back to that.
It is the defensive shield. Extreme 2. Maximum hard value insurance. On the other end of the barbell, smart money is accumulating assets that cannot be
All right, so this is you. Let's look at this view.
printed by a central bank. Gold, the historical hedge against geopolitical chaos and central bank buying. Silver, the industrial metal that is facing a supply squeeze.
By the way, let's just big shout out to silver this morning, which is just trying to look for where I have it on the folds over here, which is currently trading at $64 an ounce. That is beautiful to see. You gotta love it. A lot of, and not a lot of, some doomers, some, I call it a doomer. Anyone who since 2023, January till today, has put out nothing but doomer content is a doomer, right? You always like, market's going to crash, market's going to crash, market's going to crash. The markets are not crashing. Markets crashed, we were right. And you know, to protect themselves, they're like, oh, we buy precious metals, gold and silver. Gold and silver, after a decade of going sideways, make a move and they're like, I'm out. This again, right here, 64 to silver, they think is coming too, and that's not everyone, but the doomers. I'm just talking about those who are constantly posturing the same thing. Big shout out to silver. Gold here, we have to take a look on the line as it's breaking out. You can see the close above it yesterday, and now the acceleration out. That right there is being on the right side. Beautiful. Jumping over and coming back to the video, silver, and then of course Bitcoin.
The digital asset with a mathematically fixed supply.
So that's you. You all understand very well hard money, scarce assets, and you're protected on that end of the barbell. Let's continue this conversation and tie it all together.
These are the assets that protect against the nuclear option, the debasement of the currency. What are they avoiding? The middle. This includes high-interest consumer debt, margin debt, and speculative stocks with no earnings.
All right, hold on. I need to rewind that 1 second. Just talking about the middle of the barbell. What to avoid, okay?
Avoiding the middle. This includes high-interest consumer debt, margin debt, and speculative stocks with no.
All right, so we see meme stocks in here. Should you put into here like all of those altcoins as well? Yes, this is not alt season. Jordan, you just said last week for the first time since I could remember, it's probably a good time to be looking to lean into altcoins, understanding that, again, this part that we're navigating, you know, it could get still a little roughly. It could be a little while. It could be several weeks before markets actually and risk finds their footing with this slow building of the reserves over here. Yeah, I believe all that. But we have the barbell. So we have on one hand cash expressed in short-term T-bills. We have over here hard assets, scarce assets, Bitcoin, gold, silver. And then in the middle, we're saying be selective and avoid everything else. And you can look at the makeup right now of the indexes, of the S&P 500, 41% weighted towards big tech. Of course, it's like everything else to this point has like stay away, except right now you're seeing the Russell wake up as they're moving towards easing. So that's something to keep an eye on. But that's short term anyway, I don't want to talk about that. So being very selective, right? Or how are we selective? We focus in on, right? Well, Bitcoin, Ethereum, Solana, Cardano, and then we focus in on, aside from the spot Bitcoin ETF and equity markets and MicroStrategy, we on select tech, TQQQ, triple leverage NASDAQ 100, FANG plus, expressed to FNGU, triple leverage FANG. And then we have also NVIDIA and Tesla, like It's very selective about what we focus in on. Now let's bring this and tie this into the T-bills.
No earnings. In a world where liquidity is drying up, leverage is the enemy. The lesson from LTCM in 1998 is clear. Even the smartest models fail when leverage meets volatility.
Okay, pause one quick, and then we'll go to this character over here. But LTM, and when you take a look at this video, if you go into the ghost of 1998, I believe, and you had like all these really smart people taking on a fund, leveraging money like crazy, and then you saw Russia, the end of the Soviet Union, and they didn't plan that in their models, and that was a black swan, and that caused their bets to go the wrong way. Government Fed has to come in and bail everything out, and don't forget all those liquidity events, panics are always met with more liquidity, which is met with risk exploding to the upside. That's the hard part, the in between. So 1999, that's 25 years ago. That's a long time ago, right? So just come back to that over there if you want to watch. I recommend that portion over there, especially those that aren't familiar with it. And then the mechanics of the carry trade is a very good one, but also and understand that 50 to 60% of the Japanese yen carry trade was unwound in 2024. All right, so let's keep going. T-bills.
Warren Buffett is sitting on $325 billion of cash for a reason.
Is he? So Warren is sitting on $320 billion of cash for a reason. Let me give the reason given.
He is not timing the market. He is waiting for the dislocation. He knows that when the carry trade fully unwinds, there will be a fire sale of world-class assets.
Okay, let's pause here. Let's talk about this and let's use some charts to do it. Let me jump over, and first of all, so Warren just bought a bunch of Google. He had a great entry, right? Smart timing it seems that Google is going to be one of the clear leaders. I know that Vakanet has pointed out Amazon and probably sleeping on that. I imagine, I don't know, because Blue Origin, SpaceX, Blue Origin, who's going to be putting out these data centers in the Earth's upper atmosphere? Is it going to be? Do you guys like how I did that? So if anyone caught that, please let me know. So I don't know if Amazon, I guess one way or another, Amazon is going to be the beneficiary of these partnerships. For sure, SpaceX. By the way, I don't know if you saw Destiny 100 over here, jumping up, continuing the acceleration out. We saw Disney put $100 billion. Everyone's putting $100 billion into OpenAI. Now Disney's putting $100 billion into OpenAI, and you could see that it's beautiful. I don't care if it's missed. This is beautiful for so many reasons. First of all, the liquidity grab from this gap over here, you could see it just coming up over here. Pikers like me were probably hoping for a close, right? So you can see the liquidity grab there, and then we have the double black diamond, breakout, retest. Now the conservative and the acceleration up. This is obviously because of the move towards SpaceX IPO in 2026. Elon wants to raise money, get all over getting those data centers in space. Massive, massive, massive advantage. And then you're seeing OpenAI probably today also accelerating up. Someone told me when this was first asked to be covered here in CTM by someone that someone in the comments on the YouTube was like, how dare you look at DXYZ? They charge a 2% fee. And I was like, a 2% fee? Do you really care? Like, up now, what? Anyway, I was trying to look at Google. So Google and Warren is like, oh, then I got off on the tangent that, well, Amazon does hat tip seem like a leader, but Google and Tesla to me seem like pretty strong opportunities. Bringing it back, Warren just took a position, right? So at the height, the value investor at the height of the AI bubble took a position in Google, or you know what? Actually, it probably offers a really good value at this point. They also have a 10% position into SpaceX, and that is paying dividends for them. Jump back, rewind over here. Do you think that, so Warren's sitting on $320 billion of cash. Let me express this really quick just through the NASDAQ, the index, and then I could come back to Google. So Warren was sitting on $120 billion in March 2020, right? Waiting for the crash. Crash came. Warren didn't put any money to work because he's sitting on 120, now $320 billion, collecting that 5%. But meanwhile, I'll go to April when CTM finds the bottom over here. Meanwhile, NASDAQ's up 244%. So is it really that smart to be sitting on those short-term T-bills? Waiting. He had another opportunity here in the bear market of 2022. I know that. We saw the break over here, it closed their eyes and came up 110% since. Collecting 5%? Does that really seem that smart? It doesn't to me at all. And what I'm trying to get at over here is, yes, in a crash, if you're smart enough to know when the crash is bottoming, which is not easy. There's nothing easy about that because very few got this right. And also, very few got this right until probably into March or April, which is not bad. That's very good. That's fine because here we are, up tremendously since. But very few were able to recognize the turn and the bottom. So, a lot of people are one thing that I want to incorporate into here is wondering, this is a great session. Hit the like button, share it with a friend. Smash the like button. Smash the like button. Now, there was one thing that I really, I hear those doomers, the traditional TradFi, they're like, well, right now silver's at 64 and the problem is it's going straight up, and it's going straight up as gold's going straight up, as tech's going straight up, and everything correlated going straight up usually is bad. And they go on to say it's been happening since 2019. Okay, that should probably tell you something. As much as this time is never different, and this time is incredibly different, and this time is not different, it's unique, but there's something going on over here. And do you think over the next 5 years that you're going to continue to see big tech and scarce assets continue to go up? Or do you think that they're going to be able to go ahead and figure out a solution and just grow their way out of the debt, pay it off, and get everything under control? There's another thing too. So I believe in this. I'm so glad you mentioned that. I was pouring a pour over a cup of coffee and I was thinking about exactly that. And I was like, listen, for a guy his age and in his situation, one of the greatest market allocators of all time, someone who has been able to market master, and more importantly, at this particular moment, is getting ready for succession. And I think it's really smart to be handing the new face of Berkshire Hathaway's, the person that's taking on your legacy, right? Think about it if for the fathers out there and for your children, right? You want to give them the best opportunity. And I think handing the new successor a pile of cash to be able to not just inherit but be able to lead in the way they want, well, that makes all the sense in the world. So I think age, and not only age, but the tremendous success of the position that he's in, what he needs to do the best thing in handing it over has a lot to do with it. So I think there's a reason Warren's sitting on a pile of cash. I think it was over the last 5 years, there's no doubt it's been tremendously poor allocation of it. But that doesn't matter. But I don't think the reason is that he's been waiting and looking for that crash to come and then going to put it all to work. Could the Nasdaq, we've seen it before, could the Nasdaq come out and take out the March 2020 low, a crash of 75%? Yeah, it could happen, and we could see from the dot-com bubble to the burst, we had an 83% drawdown. Now, this is a lot different. The Nasdaq in this era was a lot of what is the future going to look like, betting on earnings that are happening today. But pets.com, the face of this whole internet bubble, and misallocation towards to Cisco, and today you're looking at these, like, this what was born out is what's happening today. And yes, it was the likes of Google, it was the likes of Meta, it was the likes of Amazon, and then later on Nvidia, and all these it's a much different situation. Do you think that we could see the markets correct 83%? Maybe it's the markets, anything could happen, but I think it's more likely that at some before that happens, you're going to see the markets up further, and then likely even with an 83% crash, you don't come close to taking out the low, which could happen, you never know. But point being is that, yeah, the misallocation of capital. All right, y'all, I hope you enjoyed this session. I certainly did. I hope it was helpful. Cabby, thanks for bringing that video to light. For those that didn't see it, give it a watch as we head towards next week when we're looking at the Bank of Japan getting ready to potentially raise rates. The one thing I didn't say is that as Vakanet put in, that they have bluffed before, and that is boom, boom, boom. Even if they don't raise in December, then likely they will in January. So, oh, are we having a down day because people are disappointed in the Fed? I don't know. I mean, I know that we're sitting long Tesla, long Ethereum, and short Cardano, and we got a bit of noise to work out here, right? The signal here is that this slow motion refilling of the reserves and liquidity into the system it's not slow motion, it's slow acting, I should say. Like last time it took several weeks. This time we're running at a higher pace. They're coming in hard, maybe to try to counteract the pressures of the Bank of Japan. But yeah, just give it a little bit of time, and likely it's going to do its job, and we're going to see the risk running. Yeah, pending short was for Bitcoin, and just to give you an idea, that V4 is short on Bitcoin and also short on Cardano. Same entry on Cardano, and there we are. So V2 in the last week outperforming. So just bring this back over to this, though, is that this is noise for me. Like we have low liquidity coming up into the end of the year after the Bank of Japan, January signal. Let's see what happens by the end of January, right? Into February, markets should have their footing by that time, which is not, that's several weeks. That was several weeks last time as well, in order for Bitcoin and crypto to find their footing, which does not mean that it's going to be the exact same playbook and that Bitcoin is destined to make and put in lower lows as well. I don't know. That's why we follow the charts, and we could see where we are right now, and that is, below here. We've looked at it break out above here, and then it's on, but we're continue coiling right now. All right, y'all. Thanks for being here. Great session, everyone. I don't think we have a January cut. We do have non-farm payroll coming out next week, and I don't know if that's going to affect the January meeting at all. Right now, January is leaning towards 75% chance that they pause, and likely that's what it will be, right? And that's fine. I imagine. For me, it is at least. Someone doesn't think so. That's great. Well, either which way, lots of love, everyone. Really, genuinely, thank you for being here. Really enjoyed this time spent with y'all. God bless you. Have a beautiful day, everyone.